In this video, I'm going to be sharing with you how much you're expecting to accrue in interest in a high-yield savings account in 2023. For the record, we do bank with Ally Bank. And before we get to that, I want to touch on a few important things. What exactly is a high-yield savings account? Why would you choose to go with a high-yield savings account in 2023? What is the key differences between a high-yield savings account and a traditional bank account? And what are some of the downfalls of a high-yield savings account or negativities that you might encounter? And lastly, I'll touch on exactly how much interest we accrued so far from January till April in a high-yield savings account. If you're new here, hi, my name is Lisa. I used to be an engineer working in corporate, and I quit my job recently in order to venture off of my own gig. Okay, firstly, let's talk about exactly what is a high-yield savings account. The high-yield savings account stands out from traditional bank accounts in that they reward you with higher interest rates so that your money can grow even faster. It uses a concept called the annual percentage yield. The annual percentage yield is very much impacted by Federal Reserve interest rates. This means that your APY or your annual percentage yield will differ, like increase or decrease, in accordance with the Federal Reserve benchmark interest rates. So just because a bank might offer you 4% APY when you sign on, it doesn't mean that you're always going to be guaranteed 4%. It just means that maybe the average or what you signed into at that time, the federal benchmark interest rate is. In this formula that I'm showing you right now, you can see that an APY is a compound interest, which means that it's using some kind of nominal interest, the benchmark set by the Federal Reserve, and it's compounding in different compounded periods. This means that you're not going to be only growing your money through your initial deposit. Every subsequent deposit that the bank gives you in interest, you're going to be making money off of that too, which is definitely pretty nice. Next, we're going to talk about why you should open an online high-yield savings account. So just to clarify, I'm actually not a big fan of long-term savings. I think that because of inflation, to make your penny stretch to that regard is definitely not as smart as investing. I believe in short-term savings, being frugal and maybe really smart with your money to save up a large lump sum short-term in order to invest it. So yes, if you're looking to save short-term, instead of putting your money into a traditional savings account, maybe with a big established bank that's going to pay you $0 of interest, you might as well put it somewhere where your money is going to work for you and grow. In the case of us, for example, we were trying to save up for an investment property, and that's why I went with a high-yield savings account.
Which is kind of funny because now we're thinking of not really getting the investment property anymore after listening to all the grunt work and very unprofessional management companies our friends had to deal with. But that's a different story.
Why would you choose a high-yield savings account over a traditional bank account? According to the Federal Deposit Insurance Corporation, or FDIC, the annual percentage yield average across most major banks is only 0.35%, which is like 10 times lower than what an online savings account would give to you. Now, traditional banks actually are very established and have different ways to make their money. They take commission from individual to business loans. They offer financial products and financial services that they sell. There's also international transaction fees. Whenever something happens, they do these international transactions, as well as so many different other ways to make money that they are no longer super motivated to give you a high interest rate when you decide to bank with them. And that's where untraditional smaller banks come in. Smaller banks are often not as established. Their history is a little bit shorter, which means that they don't have as established ways to make money. And so one of the ways for them to make money currently is to ask you to bank with them so that they can make money off of your money and also providing you an interest in the short term. Be sure to check out different fees and charges associated with services before you open an online savings account, because they may just be hidden fees and services that you don't know. So make sure you read up on it. But yes, we have been banking with Ally Bank as a high-yield savings account for about 2 years now to try to reach our short-term goal. And though they don't have a physical location like most high-yield savings account branches, when you call them, their service is quite spectacular. Okay, so now let's talk about why would you shy away maybe from banking in a high-yield savings account. And the biggest and most important one is that they don't have a physical location. So if you're someone who's used to going into an office or some kind of branch to talk to someone about your financial needs, you may not like this idea of a high yield savings account, because a lot of the times you're validating your security of yourself identity-wise on the phone. You're also not exactly seeing anyone because there's not really a physical location. I can't really speak for other banks because I haven't really banked with anyone besides Ally and Wells Fargo in the past. I do know that there is nice things about Wells Fargo, like going in and talking to a physical person. They have probably different bankers that they offer to talk to you, but I've really enjoyed Ally's services that are not in person, online. When I call them or email them, it's always super fast and it's always super friendly. So as someone who's younger, I don't mind banking online if I don't go into a physical location. Some savings accounts do offer ATM withdrawals, but a lot of online high yield savings accounts do not. Your savings are accessible, but there's a limited time per month that you can withdraw or transfer out of your savings account before the federal limit comes in and you have to be penalized with a fee. For our bank, for example, it's 6 times before we have to be subject to a penalty fee. And the last factor, which I think is actually the most dangerous compared to all of these, is the temptation to keep your money in a high yield savings account. Because you can see every single month interest accrued in your head, because the stock market fluctuates, you think that you're making more money than putting your money into investments, and that's just not true. This is a trick that your mind may give into, but at the end of the day, you have to remind yourself that a savings account is a savings account. It's not an investment account. It's not some kind of stock or some kind of business that money is circulating in. Remember that money in our society, in order to make more of it, it can't be stuck in one location. It needs to keep circulating, keep moving. And in a savings account, it's quite frankly not moving very much. It's just sitting there lump sum.
It's better than hiding it under your pillow for 10,000 years and taking it out and it's still the same thing, but it's not as great than your typical Roth IRA.
So to avoid the temptation, I'd recommend categorizing your money in a high yield savings account. For example, my husband and I have 4 different categories together. We have what is known as our fun investments. So if we have a new business venture we want to go and have a look, check out, or any stocks that we want to buy for fun and check out if it's going to work out, we have that fun investments. We have our home, and that is for our investment property. In here, we actually have over our down payment. We have some for fees. We have money just in case we don't get renters for the first 6 months. We have money for renovation. We have our emergency fund, and that's about $10,000. I think that's enough for an emergency fund just because we're not in a place where we think that we immediately need money because we're not going to run out of cash anytime sooner. And then we have our core savings. I don't actually believe in savings, neither does he, so we only have $3,500 in our core savings account. We just believe in immediately putting our money after we've saved into any kind of investments we can lay our hands on. Okay, lastly, realistically, let's look at exactly how much interest you're expecting to accrue. So just to give you some numbers, we do bank with Ally Bank and our annual percentage yield is around 3.75%. Obviously, given what I've just explained, this percentage is going to fluctuate month by month when we do get our interest accrued. As of this year in January 2023, we had $192K in our bank account. We took out a substantial amount back in March because we wanted to go and fund some of our fun investments. And so we did take out around $6,000 of that money. Right now, as of April 2023, we have $186,597.16 sitting in our Ally Bank account. Our interest year to date is around $1,978.29. And here's how it's broken up. So as of January 13th, we were paid a deposit from Ally Bank as our interest paid, so we get paid 13th of every month, $362.73. February 8th, we were paid $43 of a cash bonus that we have received because we bank with Ally. 13th of February, we were paid $505.99. 13th of March, we were paid $488.12. And then you can see that there's been some withdrawals happening because we were experimenting with investments. And then As of April 13th, we got paid $578.45. I hope this was helpful for you. Obviously, you know your situation best, and so I'm not pushing you to get a high yield savings account immediately, of course, because you do know your situation way more than I would know your situation. But if you're looking at a short-term investment strategy because you want to invest in, let's say, a real estate property and you want to save up for that, I do recommend something like this, because as opposed to leaving your money without accumulating more money, it's better to leave your money somewhere where the bank is actually paying you some interest while the bank is using your money. Take care, you guys.